The S&P 500 fell to its lowest level of 2026 as Brent crude settled above $100 per barrel. While enterprise AI spending remains a growth anchor, the persistent blockade of the Strait of Hormuz has revived stagflationary pressures. Although initial diplomatic signals provided a temporary relief, the re-escalation of energy supply disruptions effectively erased earlier market gains. Geopolitical escalation. The ongoing conflict in Iran led to the effective closure of the Strait of Hormuz. This disruption impacts 1/5 of global petroleum consumption and triggered a record energy supply shock. While President Trump briefly signaled a potential resolution, the blockade entered its 13th day with no breakthrough. To counter the spike, the International Energy Agency announced a record release of strategic reserves. However, the market remains fixated on the duration of the closure rather than temporary supply injections. AI infrastructure. High-growth technology firms decoupled from broader market weakness through massive capital commitments. Oracle raised its fiscal 2027 revenue outlook following an 84% spike in cloud infrastructure revenue. Hyperscalers continue to prioritize AI capacity, with NVIDIA investing $2 billion to expand sovereign AI clouds. This sector remains less sensitive to immediate energy costs due to record order backlogs. Passive fund inflows for new S&P 500 members like Vertiv further supported the sector's structural resilience. Stagflationary pressures. Deteriorating domestic data combined with energy shocks has increased the probability of a 1970-style stagflation. U.S. fourth-quarter GDP growth slowed significantly as a recent government shutdown paralyzed national output. Core PCE inflation reached a 2-year high, remaining well above the Federal Reserve's target. These figures forced traders to price out a June rate cut, with markets now anticipating a defensive pause. Low layoffs suggest labor resilience, but high fuel costs are beginning to compress corporate profit margins. The transition from a war-driven spike to a structural energy blockade has shifted the market focus toward long-term inflation persistence. Next week, the Federal Reserve meeting on March 17-18 will serve as the primary catalyst for recalibrating interest rate trajectories. Key variables include the GTC 2026 conference for AI supply roadmaps and the potential for a military breakthrough in the Middle East. Although AI infrastructure spending provides a structural buffer for growth stocks, the re-escalation of the Strait of Hormuz blockade has pushed the Federal Reserve toward a higher-for-longer stance.